The keyword for next year's economy is likely to be hyperinflation caused by high inflation, high interest rates, and low growth. In 2024, high interest rates, high inflation, and an economic recession are expected to occur simultaneously. When the economy is bad, prices go down, and when the economy is good, prices go up. The era of stagflation, in which the consumer price index continues to rise while the economic growth rate is low or negative, is likely to continue. The world was engaged in three wars. The global economy was simultaneously exposed to physical and economic shocks due to the Russia-Ukraine war, the Israel-Hamas war, and the US-China hegemony war of technological hegemony. The International Monetary Fund predicted next year's global growth rate to be 2.9%. Most of the 7 major countries, including the United States, predicted next year's gross domestic product growth rate to be the 0 to 1% range. This is a very unusual low growth outlook. It will be fortunately if the Middle East risk comes down early, but if the Middle East war is prolonged or escalates, in addition to the existing wars, Russia-Ukraine and the US-China war or technological hegemony, the world economy may face zero growth. The world economy may fall into stagflation like the early 1980s. The International Monetary Fund lowered its forecast for next year's global economic growth rate and significantly raised its forecast for the consumer price increase rate. There was a crack in the original prediction that the economy would recover and prices would stabilize next year. If the situation of low growth and high inflation worsens due to the surge in international oil prices, there is a possibility that the fears of stagflation will hit the world next year. In the October World Economy Outlook, released on October 10th local time, the IMF maintained this year's global economic growth rate forecast of 3.0% presented in July. The forecast for next year was lowered by 0.1 percentage points for the first time in 3 months, from 3.0% to 2.9%. This means that the global economic growth situation next year will be worse than this year. The IMF explained the Chinese economic downturn is deepening and the sluggish manufacturing sector continues, so growth is gradually slowing. As a result, IMF Managing Director Kristalina Georgieva's previous forecast, which said the global economy will hit the bottom this year and then rebound from the end of the year, actually went wrong. The inflation rate forecast has been revised upward. The IMF raised its forecast for this year's global consumer price increase rate to 6.9%, up 0.1 percentage points from last July. The forecast for next year was raised by 0.6 percentage points for the first time in 3 months to 5.8%. The time at which countries around the world will achieve their price stability goals has been postponed by another year from next year to 2025. It is a warning that the global high inflation situation will remain until next year. Even the World Economy Outlook released by the IMF on day did not reflect the recent armed conflict that occurred in the Middle East. This report was written before the world was engulfed in anxiety that international oil prices would soar due to the shock wave of the Middle East conflict. Although Israel and Palestine are not crude oil producers, there is a high possibility that the supply and demand of crude oil will be disrupted in the future depending on the geopolitical dynamic of neighboring countries. In a situation where the global economic recovery is slow, if inflation spreads due to the rise in international oil prices, there are great concerns that the world will fall into stagflation. In the future, if proxy war develops between the United States and Iran in the Middle East and blocks the Strait of Hormuz, a major passage for global crude oil transportation, crude oil supply and demand may be disrupted.